Today, we're taking a step back from headlines and predictions and looking at what's actually happening in the housing market and through the lens of economics and not emotion. We're joined by Brendan Ogmundson. He's the chief economist at the BC Real Estate Association to help unpack how inventory, sales activity, construction constraints, and capital flows are shaping the market, and what this means for real buyers and sellers making real decisions. So rather than asking where prices or interest rates are going, we're going to try to nail this down and focus on how people can understand their position in the market and make better decisions based on economic fundamentals. Good morning, Brendan.
Morning. Good to be here.
Yeah, thanks for joining us. Before we really dive into everything, just give us a kind of a high level of who are you?
Boy, what an existential question. Easiest answer, I guess, is I'm the chief economist for the BC Real Estate Association. We do all kinds of stuff at the association, from advocacy about government policy to education to what I do, which is run the economics department. We report on monthly stats and do a lot of original research and then tons and tons of speaking around the province.
Fantastic.
So Brendan, let's jump right into it. I want to kind of talk about inventory and prices and things like that. So when economists look at housing markets, inventory and sales often matter more than pricing. What does today's inventory to sales relationship really tell us about how balanced the market is for buyers and sellers? And then how can this help us understand pricing?
Yeah, I think when I started in this job with these sort of vague terms to be thrown around about balanced markets and sellers markets and buyers markets without a really good quantitative grounding. So what we did 10, 12 years ago was try and put some quantitative bounds around, what does a balanced market mean, right? And so in our definition, it is when prices are rising around with the rate of inflation is what we consider a balanced market. Buyer's market, obviously, prices are below the rate of inflation or negative. Seller's market, when prices are accelerating above the rate of inflation. Right now, and we have bounds for those that we kind of worked out quantitatively. So for Vancouver, anything between a 12% and 20% sales to active listings ratio, we consider basically balanced. Data kind of tells us that you're most likely to have prices growing around 2%. Where we're at right now looks a lot more like a buyer's market with the sales to active listings ratio across most of Metro Vancouver under 12, but maybe even closer to under 10. So that's you flip that, right? A 10% sales to active listings ratio is 10 months of supply at current levels of sales. And that means if it sticks around, so when we do kind of forecasting work, if we stay at that level for kind of 4 to 6 months, you're very likely to see some real downward pressure on prices, which is what we've been seeing over the past year.
When people are looking to get into the market or even list their home and then move up into this market, how do people weigh kind of that personal risk versus market risk, taking into account prices and inventory inventory to sales relationships and things like that? But how do things like job stability, family needs, time horizon, how does that factor into that buy and sell cycle?
I guess there's kind of a standard kind of life cycle for these sorts of things, and then conditions at the time kind of will push decisions around, right? So if you have a lot of people aged in the economy or in the province aged 25 to 44, if there's a bulk of people in that demographic, there's going to be a lot of buyers in the market. That's kind of where we've been at the last several years, and where we should be at right now. There's that latent amount of demand just because people need homes at those ages and they have a preference for buying. So a lot of it's just demographics. And then layered on top of that as a starting point is, well, what's the state of the economy? This is kind of goes back to where we were at the end of 2024, where we have all these demographic pressures and things are starting to get normal because interest rates have been coming down and we were kind of at a normal amount of sales at the end of 2000, right? And then what you're talking about hits in 2025 early on with the threat of tariffs and the anxiety that caused. And all of a sudden you have all that demand that's there but people are really uncertain about making a big financial decision, especially in a market like Vancouver, where it's a huge financial undertaking for a lot of families to get together the down payment or risk, moving into a more expensive home and using their equity, risking losing some of that equity, maybe taking on a larger mortgage payment. If all of the news headlines are about, not even just, are we going to be in a recession, but how bad is this recession going to be? And that's what we were dealing with in the spring of last year. That's going to really cause a lot of households to pause. So I think you can have all of the fundamentals in the world, like, strong demographics and falling interest rates, everything else. But if you have a lot of anxiety and lack of confidence amongst households, it's going to be really, really hard for them to make it to actually pull the trigger on a transaction. I think that's exactly the type of market we're in now.
And just before we get into the next question,
we're all
ready to jump on that one.
Hang on.
Go ahead.
The only thing I wanted to talk about was just what you said about the age demographic of who can buy. What we're seeing right now is a tremendous amount of activity around that lower end of the market. Like, people are looking, but nobody's actually buying. They're just right. And you hear that across the board for all the realtors in all the different areas, because we primarily are Richmond and Vancouver, but we're hearing that everywhere. And so, and even actually my daughter told me the other day, oh, Mom, my friends, they really want to buy, but they think the prices are still going to come down. So, right. So there's this whole theory of that happening, but there is pent up demand, right? There is pent up demand, both on the sellers and the buyers.
That's where, I always like to say, sales is not this is not the same thing as demand, right?
Yeah.
Sales are just like the amount of demand that can be satisfied.
Yes.
And there's a lot of demand, but again, because of expectations and nerves and whatever else, anxiety, uncertainty, it's just difficult to turn that demand into transactions, right?
Mm-hmm. Mm-hmm.
So this might be a relatively simple question, but should that anxiety turn down, is that what is going to help buyers come off the market? Because I think that when we look at the demographics, this is the right time for that, 22 to 40 segment to get into the market. Is that what it will take?
I think so, but also there is it's kind of a vibe, and we have no measures of vibe, right?
Right.
When that might happen, I don't know. We have if we look at markets where the rebound should be the strongest, but looking at where the shortfall versus just normal activity of sales has been the highest, and where there are a lot of people in that age demographic, Vancouver is the number one spot in BC. It has the most people aged 25 to 44. And it has had the largest shortfall from normal levels of sales, right? So there's all this pent up demand, and there is the demographic that supports that demand. How we turn that demand into sales is kind of the open question. I don't know what will cause more confidence. The economy is pretty weak, rates are stable, but they're higher than they've been certainly over the past decade. Compared to obviously before rates ran up, they're lower than they have been in the last couple of years, but higher than we're kind of used to in the market over the past decade. So I don't know what causes that change. I don't know. We're kind of we had a very bad January. I don't know what your office was like, but the numbers for the GVR area and for the Fraser Valley Real Estate Board were really weak, shockingly weak in January, and for no thing we can kind of point to, why after an okay December, why was January so weak? Don't know.
I have been asking the same question too, because we are having, our sellers are asking, why aren't we seeing offers? And
it's interesting too, Vancouver, obviously prices have been extraordinarily resilient in Vancouver. They haven't come down much. So if you're looking at affordability, the market's been slow, but prices haven't really come down very much. So for the whole year last year, the average price was down 3.5% or something. In Fraser Valley, they're down 20% from their peak, but still can't generate.
But they also, Brendan, they also had a huge peak in COVID because people moved there to have these big properties and live in their big houses. And then they all went, wait a minute, we don't want to live here. So
there was a point where the Fraser Valley average price was almost equal to Vancouver, which normally it's about 75% of the Vancouver price. There was like 98% or something at one point. But it was a big run up, but we're back to 2021 prices in the Fraser Valley.
Mm-hmm.
So affordability is the best it's been in years, but we're still not seeing anything really pick up.
Right. Do you think
so? Like, what breaks this? It's unclear, and it's kind of a Lower Mainland situation too. If you look around the rest of BC, a lot of markets are getting back to pretty normal levels of activity. So a lot of what we're seeing is like a Metro Vancouver specific issue. Toronto's got the same issue. Maybe it's a big market issue, but maybe it's about uncertainty and about pricing and that kind of thing. Like the expected loss in a very expensive market if prices fall 10% is a pretty large chunk of money. So maybe that's it. There's some evidence supporting that, but I don't know.
Yeah, I mean, I compare it to many markets. I've been around for a long time. This is my 38th year. So I do compare it to other times. And I do think that we do have a very unrealistic vision of what the market should be as, just based on the last 10 years, right? And certainly from the years of COVID, it was ridiculous. Like it's an artificial market. It's never going to happen again. We're not going to have a pandemic and 2% interest rates, and it's not going to happen again. So we all have to come to terms with that. But it's just creating confidence. And one of the things what we've been talking about is, if you're actually out with a buyer and showing them something, they're probably going to buy 1 or 2 out of the 50 you show them. And so we're trying to say to the buyers, hey, this is your opportunity. The market is down. Maybe it hasn't hit bottom, but there's only one person who's going to hit bottom before it turns the other way. So anyway, but we are working on that for our buyers. But what about foreign buyers? What about bringing that back into the equation? Would that help? And should we do it? And is it necessary to do it? Because I actually heard you talking to Gloria Makarenko saying that was almost a necessity.
Yeah, I think it's necessary for 2 reasons. The first is just looking at the pretty aggressive housing construction targets the federal government has and that the provincial government BC has. RBC had an estimate that just to pay for the construction spending alone to meet Canada's housing targets by 2035 or whatever the number, the date is, over a 10-year period, we would need $2 trillion in capital, right? We can't source $2 trillion in investment capital into construction alone from domestic savings. Canada's too small, our capital markets aren't large enough, or just our population isn't large enough. So we would need the investment. Again, it's a necessary but not sufficient condition. Even if we had that much capital, that doesn't mean we could complete that many homes. In BC, it's probably somewhere between $200 and $300 billion. So it's just a huge amount of capital. So just to meet the targets of the government, that's the amount of money we would need, and we can't source that here alone. Secondly, there's a big problem in BC and largely Metro Vancouver right now that we have the highest level of unsold new units since 1995. The last time this happened, it set up a pretty destructive cycle for affordability where inventory kind of was just stuck at these really elevated levels for a little while. This is in the 2010s after the financial crisis. Developers stopped building because you've got a bunch of product that you can't sell. You're not going to start a bunch of new projects. And then smash cut to 2015. We have very stagnant inventory. Demand starts to pick up. Active listings run down to, in the province, about 25,000 listings, which is very, very low. And we get massive price accelerations. And you can go back and blame all sorts of different factors for why prices were rising. My favorite pet theory is that the spike in home prices that happened in Vancouver in 2015-16 was caused by the oil crash in a global oil crash, because oil prices fell a lot, by half or whatever it was at the end of 2015 and then 2014. Then the Bank of Canada cut rates back to 0.5%. That drove 5-year fixed mortgage rates down to their lowest level in history at the time. The Canadian dollar fell. So we had this like confluence of things where demand got supercharged both domestically, and then we had a lot of foreign investment because the Canadian dollar fell, and that just kind of poured gas on a fire that was already going. And we had, but we also had very low supply. So we can't control that kind of thing, right? That's we couldn't predict or control oil prices falling in the mid teens. Right. We can't control demand. The one thing we can sort of control is supply, and how much supply we permit and how much supply we allow to be coming on the market at any time. And we've been very bad at that. So in order to not repeat that cycle and wait for the next inevitable demand shock, we need a consistent amount of supply. And instead, if we don't kind of direct some demand towards reducing that inventory, so allow non-resident investors to buy new units or pre-sales, like there's an Australia model where foreign investors can buy new units, but not existing homes. Why not try that so we can direct some capital towards getting construction going and also reducing inventory so we don't repeat the mistakes of the 2010s.
So you guys do that advocacy work on behalf of, us. How likely is that to happen? Are you hearing rumblings of it?
I stay out of advocacy, so we have a bit of a firewall. I mean, I'm probably the last person you want talking to politicians most of the time. And it's not allowed. I don't want to have to register as a lobbyist. So, but yeah, our advocacy people talk to the federal government, talk to the housing minister's team. We talk to the province a lot. How much they listen, obviously, like this is stuff that polls extremely well. It's fun to blame other people for your problems. So no surprise that whenever you ask Canadians about who's to blame for high home prices, foreign investors almost always in the top two, because how could it be us? So it's difficult. You'd have to take some political will to say like this is actually the problem. We need this investment. I think the Carney government will be open to it because they seem a little bit more rational and logical about these things, but it will take a bit of political will.
Okay.
Do you think that the foreign buyer, if we were to relax some of those rules, do you think that it's still the threat to the more local person trying to get into the market, or do you think it is actually that solution? That one I still can't wrap my mind around.
Yeah, I mean, if you restrict them to new units and pre-sales, like who are they competing with? Right, they're especially on the pre-sale side. We need that investment. So unless we're going to completely change the way we finance condo construction, the only way we can build condos right now is through pre-sales. If the pre-sales aren't there, then we don't get those units. So if allowing non-resident investors to buy pre-sales gets supply going, then I think it's kind of a no-brainer. I'm not, as long as we have guardrails to make sure that those units aren't empty. They weren't really, It was always inflated how bad the empty homes thing was in the first place, but we certainly have enough taxes now. I think there's 3 for the city of Vancouver alone that you would have to pay. We can ensure that those units would be occupied. So, and then on the new side, like who they're competing with again, maybe some domestic. If you're buying a newly completed unit, maybe there's some competition there. Maybe drives prices, but as long as we're staying away from the existing housing stock, I'm not sure. For like more affordable housing, I'm not sure it makes a difference.
Okay, that's interesting.
And also because of something called this idea of vacancy chains, where every time you add new housing, it frees up the existing housing stock. If you're a household that would like to move into something, you're looking around, the existing housing stock's not quite fitting what your needs are, but there's new stuff being built all the time and you can move into, it frees up the more affordable part of the housing stock, right? So the more construction we have, the more listings we get in the existing housing stock that's more affordable. So you have less competition for those units from higher income buyers.
So it sounds like it might be a lever that can kind of just help a little bit of momentum back into the market.
I think it just helps have a healthy functioning market with a lot of turnover, which is what you want. Like the worst is when the housing stock is not turning over at all, right? If you don't have a lot of listings, then you have a lot of competition for whatever listings are in the market, and that's where you see prices being driven higher.
Brendan, thank you. Thank you very much for coming on board with us today. We really appreciate it. It was lovely to, we saw you at an event and then we listened to your radio interview, and we're very privileged to have you here today. So thank you.
Thank you.
Really great.
A very, very nice way to spend a Friday morning.
Thanks.
Wonderful. Thank you so much, Brendan. And hopefully we'll have you on the show again soon.
Absolutely.
Enjoy your weekend,
Thanks.
everybody.